right. Let's get some people back, huh? We give it 3 minutes. Give it 3 minutes. Morning, Dougie. Salam. We'll let everyone file back in. Sorry for the fire alarm. Oh, right on. Passing a challenge. Congratulations. All right, good morning. Time to get on with it. Welcome back to Forex.Today, the YouTube community of 21,000. Very cool. So this is part 2. Yeah, this is part 2. Very, very, very cool. Sorry about that. There was a little fire alarm. What we had looked at was the fundamental macro change in pound yen pre-London and then reaffirmed pre-New York. Because then, you know, Americanos, when they get out of bed, they need to be updated. Hey, man, pound yen is a little more bullish. And then we went to the chart and we updated to QB5 because it used to be a QB4. And our logic, we're looking at something that might be moving up and that we're focused on the right thing for the right reason. And we're removing randomness from our trading. Okay, very cool, right? And the time frames in which QuantBox updated you was here and here. So you could be well on your way on a bullish trade today on pound yen. Cool. And 2 hours ago, TRADARS gave you an update for the day. Okay. Now it's already come out, but 2 hours ago it said, hey man, keep your eyes on kitty cat because of inflation. Okay. Right now, potential bullishness on Amazon. Back to resistance for Meta. And look at NVIDIA. It was down 13% in 3 days. And TRADARS has noticed that this is still a bearish directional trade. If you sold at the top of the channel, then you would take the distance from the top and the bottom, and then you'd project that forward. That makes sense? Yeah. Amazing though, huh? Up near 150 and then suddenly we're targeting 111. Yeah. $40 drop. Only thing going on in currencies right now, we have Aussie dollar double topping. You see that? If you want to call that a double top. This just gets you back to the neckline, but it could go as to the bottom of a channel, right? So you might be starting at the top, which it's pointing you towards. And it's not like you would stop here. You'd most likely, that's just the next level of support. But you're probably going to go down to the primary support, you know, and watch your RSI drop down into here, huh? Okay. Aussie dollar down. USD CAD down. Now notice what this is telling you. US dollar non-directional. Because this says US dollar strength. This says US dollar weakness. Or US dollar's neutral. Aussie's giving up. Or USD kitty cat is strong. Shows you the lack of direction. But this is why you need your fundamental bias like QuantBox, for example. But you can see the plan here makes a lot of sense if you're taking it directionally. Okay. Yeah. So that pullback and then down. Bitcoin maybe stabilizing. There's no break suggested or anything. But back to 62. Hey, well, we had, what, 3 weeks of TRADARS pointing Bitcoin down. And it dropped from 70 all the way down to 58.5. So it's kind of back and stabilizing, huh? Ethereum already showing a rising wedge. So if you're already a bull, yeah, these things are nice, right? Like, for example, if you're a bull, right, you buy at the bottom of the channel, and then you can project that out. And you can see all the projections here. And here, right? Now, that's just the pattern. Remember, if you're a long-term bull, this is likely to continue. The pattern isn't necessarily a trend. The pattern is just a pattern. And if it had been coming down, and while it was falling, you were a bull, then this is now trying to show you that maybe we have a trend developing. Much more than just simply, buy here and target here. Well, I mean, you could do that, but it's simpleton stuff, right? You want to develop trends. Now imagine this was a pivot profit zone and all that kind of stuff, because then you could swing it back the other way. But anyways, this is just the setups. These are just setups. FTSE, maybe a recovery. Oil. Okay, oil. Are you a bull in oil? I'm a bull in oil. Okay, you could see back in around 76, this trend started to develop in oil. And the theory is this could go up, the next move would take us to 85. Well, 84 here. Okay, we'll say 84. Okay, cool. Right on, that's good, right? 84 starting at 76. Well, if we go over and look at that and drop this, look, I'm long at 76. And TRADARS says there, remember, it's just doing pattern recognition. It's saying if the pattern continues, the next target is 84, which is way up here somewhere. 84. So the target is here. Not likely to hit it today, according to technical analysis. Okay, if we were going to move up today, it would likely, okay, it would likely look like, you know, up to here, and then we would need to probably set up a roll reversal, and tomorrow we buy a little dipsy-do. That'll probably get us close, but then we'd probably want to set up a roll reversal, and then boom. So maybe by the end of the week, we can get that to 84. Okay? You see? Now, there's a lot of water under the bridge between now and then, isn't there? Top of the range, yeah, because you're thinking this way, right? Sure. Okay. If you're going to argue that, you could argue probably even higher. But we typically are running out of time on this one. I don't think the major issue is price. I think the major issue is time. But aren't you happy that I'm long right where TRADARS says to be long? Okay. So I hope you appreciate the process of finding your bias using quantitative analysis of macroeconomic data, and then comparing either assets, market sentiment, or comparative analysis of two economies, and then using technical analysis to enter and exit trades. I think both tools are amazing, but using one tool and not the other is not ideal. Okay? All right. Let's just do around the world. Okay, still no breakout on silver. A little surprising. Might as well get rid of this old plan. Just clean up a little bit. And it's technically not bearish still. So if you're a bull, you wait. You wait. You wait your turn. Okay? It's frustrating sometimes. I got you. I got you. Okay, you still want to kind of move it up here. It's just not happening. That's all right. Wait your turn. Don't force it. Okay, there's Bitcoin at the bottom of the channel. Now, I drew this at some point. I don't remember when. We've analyzed the trend. It's still technically a little bit down. Just trying to get from the beginning there. Okay. But TRADARS said, hey, you know, if you're a bull, this is interesting. Remember how it showed some bullishness? Okay. TRADARS said, look, if you're a bull, this is interesting. It doesn't tell you to be a bear. Emerald says we have to see what inflation is telling us. Yeah, but, you know, we're kind of near the end of that regime, right? We have central banks cutting or waiting to cut. So some of you, you're thinking this, but you know what? There isn't a trend yet. This is what the point I was trying to make by drawing this even last week. Okay? You're in a range. So even if you're a bear on this, it would be foolish to assume you're going to break. Because now you're guessing. That's not what technical analysis tells you. Technical analysis tells you like this. Now, if it happens to break to the downside, then you have the breakout strategy, right? But that has not happened. So I would not guess. In fact, in the training course, I tell you that a sideways trend like this is going to move sideways forever and ever 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 and ever. It'll move sideways forever until it breaks. And has it broken? No. Okay. So, excuse me. Silver and gold. We can now look at gold. Once again, not bullish. Okay. It went higher than I would have liked as a bear. And that's because it hadn't broken lower. Okay. Trading in the middle of the range is dangerous. But if you're going to be a bear, you can be looking at this like it's a head and shoulders. And that's part of what's going on here. I asked you if you were risk on or risk off. I don't think I saw the results before that last stream died. Looks like YouTube is throwing warnings again. I don't know if it's me or if it's YouTube. I probably have to reboot my PC. Something like that, so I apologize. Okay. And right now, there's a couple of things going on. Okay, we have a top, and now we are fighting this zone. And I guess it was last week I identified this area for us, and it worked tickety-boo. So now the next move that is possible, remember, it's rangy, but if it breaks, then we definitely have something new to be playing. And maybe even a connection like that. What do you think? Oh, thank you, Charlie. Richard says, has run too far too fast. I don't like that. I'm not disagreeing with you, but I don't like the thought. Don't think that way. Because the amateurs sell things because it's gone too far too fast. And that's very, very, very dangerous. What I'd rather point you towards is seasonality, and that you should expect, somewhere around quadruple witching at the end of June, profit taking. That, my friend, is more of the reality, and it's much safer. Because I see a lot of amateur traders, and I'm not saying this is you, but I see a lot of amateur traders, they walk into our community, and the only thing they're good at is selling rallies and buying drops in the market. Okay. Restate the question so I'm addressing the right thing. Okay? So never, 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 ever, ever, ever sell anything because it's too bullish. Oh, it's gone too far too fast. That's terrible. Oh, that's every quarter. In the third week, all options expire. All futures contracts expire. But also other things like warrants and, I don't know. So the way I explain it is if it can expire, it does expire on that third Friday. And we're also getting ready for institutional investors to stop really trading and go away for the summer. And so it's an opportunity, if they're in a futures contract or an options contract or whatever, maybe they're in a cash position. It's just typically a time to what if you're going to take profit on something? So you're an institution and you made a couple of investments that are up 10, 15, 20%, and it's summertime. You're like, you know what? Let's go to cash on that and revisit that in the fall. And so this is a profit-taking time. So never think like you're going to sell the NASDAQ because it's too high, it went up too quickly. No, that's dangerous. But to anticipate profit-taking because of seasonality, well, that's much more logical. Good morning, Aris. Here's a different point of view of the same thing. Higher time frame. Okay, this is important, and this is important. Okay. So it could fall a bit more and not really change anything. Okay, but once again, this is technical analysis. It's backwards looking. Now we can use a different chart setup and use leading indicators, right? So like on this one, I used a leading indicator to short the NASDAQ. Okay, and you're like, what do you mean leading indicator? Okay, on January 1st, this was our conservative projected high for NASDAQ. Can anybody confirm this? Basically, no, totally. 6 months in advance, this was our conservative projected high. 6 months in advance. Charlie confirms. Anybody else? Frank confirms. Anybody else? Yep. Do you remember the days? Do you guys remember the days when you didn't know this stuff? How the market would flip and it would feel like it's random? Now, when you listen to the Bloomberg radio or watch CNBC on TV, they have all these experts that give all this BS rationale of why this is happening. And none of them mention, oh, well, that's the price it's supposed to stop going up. And then I hope you feel this way. I know I do. Once I knew this information and I started to listen to the quote unquote experts on TV that are trading billions of dollars, I very quickly realized they don't know. I used to think they were bigger, smarter, faster, better looking than me because they trade a lot of money. I thought because they had $1 billion and I had less than $1 billion, that they were better than me. Okay? I really did. And they're not. And it's not me. It's like what you and I do is informed. And I hear things after the fact, and they're making things up that sound logical, but they don't know. But we do. Sure, Charlie. Yeah, people overdo it. Yes. But I'm open to the criticism as well, sure. Okay. But the more I observed the market, the more I realized that what we do is good. There's another moment in time that I'll never forget, and it was the day that I went onto the trading floor of the Chicago Board of Trade. And I went to the soybean meal pit because that's the first one that's there when you go through the big door. And I went to the S&P 500, and I went to the 10-year T-note pit, and I observed what people do for a living. And flying to Chicago and then going through security and going into the big room with all these guys with their cool jackets and stuff, I had a lot of imposter syndrome where I was just a retail Forex trader, and I'm amongst these real traders. Okay? And when I left at the end of the day, I was ecstatic. I was like walking down LaSalle Street, popping into the air and clicking my heels like it was singing in the rain or whatever, right? I was dancing on the poles, and no, don't think the street light poles. But I left with this confidence, because I went in with imposter syndrome. I'm just a retail Forex trader. And I came out knowing that I can compete and beat these traders. Not all of them and not all the time, but I had enough. And it was important to me in my, I suppose, personal development as a trader to know that I have great tools that work, and I see what other people are doing, and a lot of people are just using what they like, some weird belief system, some hocus pocus, and a lot of kind of guesswork and conjecture. And I'm like, dude, I can compete with these guys. I don't care if they got $1 billion. We have enough. You and I, we have enough. Yeah, well, but it makes sense though, right, Richard? Where you're like, they have $1 billion and I don't. So they have more. They must be bigger. Because they're bigger, they must be smarter and stuff like that. No. They just happen to have more money. So anyway, like looking at tools like this, I think is really great. Like, is there any doubt that number was important? And then you go on TV and people are saying, yeah, well, it's NVIDIA. Yeah, well, it's this other thing. Or yeah, well, it went up too far, too fast. But frankly, and I'm going to curse to make the point, that's bullshit. It went up and hit our target. That's why it's over. And then you combine that with seasonality. It's like, okay, this is it. This is when you either short out of alpha or you hedge. But you should be able to be prepared. Now, does it mean it's not going to go up? No, I don't know the future. I don't know the future. And there's a couple of things that are very likely to happen. Okay? One of these things. Okay? Or one of these things. Okay? Because we only know what I've told you before is between the middle of June and the middle of July, there's a window in which something like this is extremely likely to occur. Is this the one? I don't know, bro. It could double top. It could head and shoulders. There's a lot of ways this can go down. And this is one of them. Notice I didn't trade it until after the break. Okay? But because we have tools, very, very, very good tools, we are ready, willing, and able. Okay? So TRADARS in the very near future is going to combine all our training, all our live coaching, all quant box, and all technical analysis through the TRADARS platform. It's all going to be in one spot, and it will be your trading and investing platform. It's going to help you trade as a sustainable small business. Literally the power of a multi-billion-dollar hedge fund that's going to cost hundreds of dollars, not tens of thousands of dollars. You're going to be able to be an Axelrod trading out of your kitchen or your home office. But you'll have quantitative analysis, right? You'll have technical analysis. You'll have performance coaching. You'll have ongoing training. The absolute total complete package. And I'm working on things to either get you funded or maybe get this for you for free. Okay? How about that? So I'm working on things for you, but this will, if you are serious about trading and investing as a side hustle, as a retirement career, or as your total career, okay, this is going to be a platform for you to do business. Okay. Yeah. Well, Bernd, many, many years ago, I ran a program where FX Bootcamp was $300 a month. But that time I was working with GFT. And I created a program with them where if you opened up a real trading account and funded it with real money and did real money trading, you got a rebate. And they paid for FX Bootcamp. Yeah. And I would have to spend one afternoon every month. It took me many, many, many hours to just PayPal people their $300 a month. Okay. T+3 and T+1 are settlement times for equities. Forex is T+3, but it's very invisible to a Forex trader. The only thing that is interesting about that for Forex traders, Abdul, is Wednesday rollover. You get paid for 3 days. So let's say, let's go to pound yen. Okay, on a pound yen, this is pound kiwi. I meant pound yen, but whatever. Funny, there's not even a pound yen on this. Okay, all right. Pound yen. Let's say at where's my tool? Okay. At let's say 4:45 p.m. New York time. You buy pound yen. Great British pound yen. Okay. JP, wow, I'm a little bit slow today. All right. So you buy at 4:40 on Wednesday. Okay. Now, at 5 p.m., you get paid interest on rollover. The thing is, on this day, you get paid for Saturday, Sunday, and Monday. So the interest you collect on Wednesday is actually the interest over the weekend and Monday. So the strange thing is you've owned this for 15 minutes, but you get paid for 3 days. You collect interest as if you held them for 3 days. It's weird, isn't it? Tuesday, you get paid 1 day. Monday, you get paid 1 day. Friday, you get paid 1 day. Thursday, you get paid for 1 day. Wednesday, you get paid for 3 days. And it has to do with the settlement time in a way that it works in the background. Okay, now retail traders, it doesn't matter much. Instead of, collecting 20 cents, you collect 60 cents, right? But if you're a multi-billion-dollar firm, it can mean a lot. Okay, I know somebody that made $10,000 on a rollover. So I yelled at him, but he leveraged up. This is back when you can get even more than 200 to 1. And so he put like a $100,000 account and he went all in on rollover. And the spread moved 30 pips or something, and he exited. He collected the interest payment for 3 days on that, and on many millions of dollars. And then he also made 30 pips on it, and that added up to 10 grand in about 2 minutes. But I'm like, dude, you could have lost 10 grand in 2 minutes, right? So I yelled at him. I thought it was stupid, but he did do it. He did it first off of a Swiss broker because their 5 p.m. rollover was a different time than New York rollover. So he did it twice that day, and made made many thousands. So you can imagine if you're a big fund, not with 100,000, but you had 100 million or $1 billion. But I think the more money you get, the less likely you're going to gamble. And to be fair, that guy did go bankrupt, and he does not work in the industry anymore. So if you make a lot of money quickly, you're doing everything wrong. Okay. Look at that. Starting to look good. Okay. So remember, these resources are cool. You're getting morning updates from TRADARS and QuantBox to help you focus on the right thing for the right reason. Take all the randomness out of your trading. Randomness is risk. Risk is bad. Peace on earth, may the pips be with you, may our profits be above average.